I like your background, Steve. It looks awesome.
Let's see here. So everyone, thank you for joining us for the Paycheck Protection Program Loan Forgiveness webinar, sponsored by America's SBDC at Midwestern State University and Think of IT Computer Services. I'm your MC for today. My name is Steve Haviland. I'm the owner of Think of IT. And as we get started, one of the things that I would like to talk about are a few housekeeping rules, or a few housekeeping items anyway. First of all, we will have a PowerPoint that we will go through for the first little bit of this presentation, followed by a Q&A with our panelists. So if you will note down at the bottom of your screen or your Zoom meeting, you have a Q&A button where you can click and ask questions. You also have a chat button where you can chat with the panelist and ask questions there as well. And then, so you can ask those questions throughout the webinar. We do have folks standing by to try and get you answers. If they don't know, we'll ask the panelists during that portion of the event. So let's hop right into it. And first of all, let me talk a little bit about myself. I founded Think of IT Computer Services back in '09 and am a recently published author of Hack Proof Your Business. I've been a Rotarian since 2017, and I run the Wichita Falls Help Wanted and Wichita Falls Entrepreneurs Facebook groups for our community. I'm really passionate to be able to bring events like this to you guys, and so I hope that you do find value in this. And with that, I want to ask Vanda, who is our next presenter with America's SBDC at Midwestern State, to say a few words. Vanda?
Hi, Steve. Thank you all for attending. We have a lot of information for you today, and just look forward to your questions. Steve, thank you so much for really hosting this, and to all the other panelists that have agreed to help us out today.
Wonderful. Thank you, Vanda. And next we have Danny Cremines with First Capital Bank of Texas, formerly Fidelity Bank. And Danny, you want to say a few words?
I just want to say welcome to everyone that's attending, that we're all going through this together, banks and our customers, and that what we're going to present to you today is, and I think we'll say this several times, is what we know as of today. The one thing we know will happen is this will change in some ways. So don't go out of this seminar and think, oh, I got it. Keep your ears to the ground and talk to your lenders as well, because some of this will change. Hopefully some of this will become a lot easier. So we just appreciate everyone attending. Appreciate you doing this.
Good deal. Thank you, Danny. Now, next for our panelists, we have Gloria Reese with Sycentrix Business Advisors. And Gloria, are you there? Can you say a few words?
Yes. Thank you. Thank you, Steve, for inviting me, and thank you all for attending. And yes, we will try to answer to all of your questions, but things will change. So just be updated, call your lender, but call also your tax preparer or business advisor if you have any question.
Wonderful. Thank you, Gloria. And we were going to have Randy Brewster from Texoma Community Credit Union. Unfortunately, Randy had an event that came up, so he was unable to attend. But we do want to thank him for helping to prepare our presentation today. So before we get started, I want to talk about a disclaimer. I know that there's a couple of attorneys on the call I recognize from the attendees list. So I just want to go out there and put this up for everyone to read. and read it out loud for everyone, that the information contained in this webinar doesn't represent an endorsement or an opinion by any of the participants of the webinar. And we aren't making any representations as to funding, approval, endorsements, forgiveness, or compliance with the United States Small Business Administration or bank programs. Any information presented in this webinar is 100% subject to change. It may not, but we know that this is something that's fast moving, and as Danny has already said, some of it will change. All the information presented here is subject to interpretation. Different people may interpret it in some different ways. And links have been provided to the sources that we use to gather this information for you, both the United States Department of the Treasury and the U.S. Small Business Administration. So we will present those links toward the end of the presentation. In terms of lender information, Danny, I'm going to turn this over to you because I'd like you to talk about this.
Sure. Lenders are going to handle this differently. Some lenders are going to have, as we are, web portals where you'll get an email link for, I can speak about what we're going to do, and it's going to probably be like a lot of lenders are going to do it. We're going to send out an email to the customers that we have. You're going to get a link to a web portal that will basically pre-fill some of the information for you, your SBA loan number, some of these items. You will upload some stuff. It'll help with the calculation, and that's how we'll get the stuff. It's going to depend on your lender. So whoever your lender is, contact them, find out their method, find out how they want to receive the information from you, what they want to see, because a lot of this, as you go through, is going to depend on the complexity of the business and the size of the loan. If you've just got a couple employees, or you're just a single employee, self-employed individual, then this is going to be a lot easier than if you've got 50, 75 employees. So I would just say, as this moves along, contact your lender, see what their process is going to be. And again, keep an eye for changes. I will say this right now, that one of the things that the Texas Bankers Association and American Bankers Association are pushing for, that didn't happen with the bill that we're going to talk about in a minute, but that we're pushing for, is a incredibly simplified process for loans of 150,000 or less. That's the number that we think we can get, the associations think they can get done. Anything below 150,000, we're pushing for hopefully just a certification and not all the same calculations. So again, this information is as we know it today. These calculations could stay the same. But again, as this moves along, just call your lender, find out the most accurate current information.
Wonderful. Okay, so one of the things that I did want to point out is that one of the critical things is to call your bank and make sure that based on the changes to the CARES Act that were made yesterday, that you check what your loan requirements are with your current bank, because the financial institution has to agree to modify the loan to the new standard. Is that right, Danny?
Yeah, that's correct. Anything that books after the president signs this bill, which should happen today, will follow the new rules, which is the 5-year maturity, the longer deferral periods, etc. Anything that's already on the books, the loan's already been signed, so that would have to be a modification done that the lender would have to agree to. The ultimate plan for all these is that they all get forgiven, and that there's no extended period of payback. We all know that's not going to happen to everyone. But again, right now it's kind of card laid, card played on the deals that are out there. But contact your lender if you end up having some that's not forgiven, to see if they will modify the loan.
Good deal. Thank you for that. Okay, so with this slide, I'm going to turn it over to Vanda. And Vanda, you want to kind of carry us forward and just let me know when to click?
Okay, sure. You know, some of this, as with any government department, there are a lot of acronyms. And when you are reading the forgiveness application and the instructions, it's to me very helpful if you're just familiar with what the acronyms are and exactly their terms. So we'll just put a few of these here. The date of disbursement, that is the date that your loan was funded by your lending institution. The covered period, this is something you kind of need to pay close attention to, is your covered period or alternative payroll covered period. So for most people, it's going to be covered period. That is the date the loan was funded plus 55 days. This was prior to the Senate signing the new bill yesterday. We believe that the new covered period is going to be 24 weeks. So just remember the date that your loan is funded counts as day one. So we believe that will be the new covered period just as soon as we get President Trump's signature. For some people, you could choose an alternative payroll covered period. Folks, especially like restaurant owners, if you have a biweekly or weekly payroll schedule, you are allowed to, your covered period was allowed to be a little bit different. So if your loan was funded on a Wednesday and your next payroll period began on Sunday, you were allowed to start your alternative payroll covered period that following Sunday after the loan was funded. The only thing affected by this alternative period, though, is your payroll expenses. All other allowable expenses are your original covered period. So just pay close attention if that applies to you. Pay close attention on your forgiveness application to if it's asking for the alternative period or the covered period. I'm going to touch on just some allowable expenses for payroll. And generally speaking, we're talking about, of course, your hourly or your payroll. Then the state unemployment tax is included along with employer contributions to employee health, insurance, and retirement plans. So that would be your gross payroll expenses during your covered period. The non-payroll expenses are things like rent, whether it's real or personal, your business mortgage interest, and utilities. And we'll go into that a little bit further, but it's pretty much what everyone thinks of as utilities.
So one of the things, Vanda, there was a question that came in over email that I'll go ahead and ask since we're right on the subject of allowable expenses. Mm-hmm. And that was the matching funds that employers pay for payroll, things like, the Medicare and Social Security employer side of the contribution. Is that included in allowable expenses as well?
Federal taxes are not included.
Okay. Let's see here. So there's your next slide.
Okay, so some basic information, and we updated this just this morning. So you may see some different percentages, and that's because there are like 40 different updates to the original CARES Act pertaining to the Paycheck Protection Program. So just know, as others have alluded to, what we are telling you today is to the best of our knowledge today. But just yesterday with the Senate signing this, you'll hear it called the Flex Act. It has, in my opinion, it has made the forgiveness easier, has kind of loosened some of the original regulations. So what was 75% is now 60% of your loan proceeds, a minimum of 60%, over your covered period must be used for payroll cost. So that now allows a maximum of 40% to be used on things like the interest, rent, and utilities. The principal and interest payments, should you have an unforgiven amount on this, we're going to be deferred for 6 months. That too has changed with this new bill, the Flex Act. We know that the collateral and personal guarantees were not required. There are no fees. So, you know, just one of the things to be aware of out there, there are no fees attached, and you need to be aware of that. The loan did have a maturity of 2 years at a 1% interest rate. It has now been changed to 5 years. So if you have a portion of your loan that is not forgiven, that will begin at a minimum of 5 years and still remains at rate of 1%. We've put the link there to this brand new information, so you can check that out for yourself. So I'll go ahead with this. The forgiveness, just, we always try to go back to what was the intention of the act, the intent with which it was originally written. The PPP program is part of the CARES Act. So the forgiveness was based on the employer maintaining or quickly rehiring employees and maintaining those salary levels. So there are 2 parts to the forgiveness. We will need to see what the update is saying about this, but there were 2 parts. First of all, you need to maintain the salary, the level of pay for your employees. And then you are also needing to maintain the number of full-time equivalent employees that you have. And if
Ben,
either of those, yes,
if I can jump in here real quick.
please do.
Everyone that already has a loan, on the application, you filled out number of jobs. This is not the same thing. I've sat in on a couple other seminars that indicate that the number you put on your application was number of jobs, because the government wanted to know how many jobs were being saved. Jobs could be just a part-timer for the purposes of that application was considered 1 job. It was number of jobs, period. On the forgiveness part, you're dealing with full-time equivalent. So those numbers don't have to be the same. If your full-time equivalent number is less than the number you put on your application, which it probably will be in most cases, that is not a problem. Those are 2 different measurements, if you want to call it that. I've gotten that question a ton. So don't worry about those numbers being separate. As you calculate your full-time equivalency, as these instructions show you, that number just needs to stay the same or be better from the beginning of the period that it mentions to the end of the period, which is now, I think, the end of December, I think they've given. So don't worry about those numbers being different.
Danny, thank you, because there's been a lot of confusion over that and a lot of concern over that. So thank you very much for that. The PPP forgiveness instructions and application, the link is right there, but just as Danny has mentioned earlier, make sure you contact your lender, because the calculation process right now, as I have seen it, can be very frustrating. And so hopefully, your lender will have that online portal that will make this much easier for you. And we'll get into this more, but just, know that whatever you do, have documentation, because you are going to have to turn in certain pieces of proof to your lender. And so, it's great to have your CPA or your payroll service, but keeping professional involved with this, let them know what's been going on so that everyone's on the same page, and that you certainly have that documentation when you're asked for it.
Are you ready for the next slide, Vanda?
Yes, and I'll just say that we certainly will email everyone this presentation. And I'd like to say, we know all the rules of a good PowerPoint have been broken here because we have so many words on here. The point is for us to hit the highlights today, but then when this is emailed to you, you have it worded exactly, lifted out of law or from the Treasury Department or the SBA. So that's the reason for so many words today. And we're just going to hit the highlights.
Hey, Vanda, if I can jump in and answer a question that I noticed was on there, dealing with the 24 weeks, wanting to know if, because that period's been extended, if people can come back and can borrow more money. Right now, the answer to that is no. Again, not saying that couldn't change, but the 10-week period of payroll that the loan was calculated on, that's just how they decided essentially to decide how much to loan. And then the 8 weeks of the time period allowed for some of that extra money to be spent not on payroll. That's the reason the timeframes were different. Now they've just, because of pressure, come out and said, well, you may not have the ability because you didn't get to hire employees back timely. I know a lot of people had issues with not being able to hire employees back because, quite honestly, they were making more on unemployment than they were making coming back to work. And so that's one of the main reasons that this period was extended out to 24 weeks, and the period for you to rehire people if you'd let them go through the end of December instead of the end of June. So right now, the answer to that question is no. You cannot go back and borrow more money at this point because they've extended the period. They're just more extending the period to allow flexibility to spend the money that was received.
Okay, and Steve, I know we were going to say questions to the end, but some of these are kind of relative as we go along. But Donna had a question about what qualifies as an FTE. Donna, there are several different, Danny and Gloria certainly jump in here, but there are several ways to figure FTEs. But one of the simplified versions is if they work 40 hours, it's 1. If they work 80 hours, it's still 1. So nothing's greater than 1. And any employee that works less than 40 is a part-time. So it would take 2 part-times to have a full-time equivalent. However, there's another longer method to figure it out, and you can do both ways to see which is most beneficial to you.
Yeah, I think the key there is to, obviously you have to calculate it the same way at the beginning of the period that's being measured and the end. It would seem to me that the simplified method for the vast majority of people is going to be the easiest way to do it, because if you calculate that, that way at the beginning and you have the same number of employees or more or roughly whatever, then calculating it that way just is incredibly simplified. The other method can get pretty convoluted.
Right. And Steve, David Smith is also online, and we jokingly call him the Dr. Fauci of the CARES Act. So he may have some input along the way, and it may be easier for him to answer rather than type the answers. Okay, let's see what else here. I promise we're not going to read all of these slides, but let's do touch on these, the Flex Act that, again, we're waiting for the president to sign, but we have been assured that he is going to sign this. The magic date for starting a lot of this was February 15th. Our area did not see the effects of this program so early. We were, you know, March 19th, give or take some days, when we started feeling the impact. But the reason you see February 15th is that is when, you know, it was more prevalent in other areas of the country by that time. So again, another deadline extension is just the ability to apply for the PPP loan, and that is to December 31st. Okay, Steve, next slide, please. So the Flex Act has come in, and we'll touch on this just one more time. 60% is what is required, a minimum of 60% for the loan to be forgiven, and that is payroll expenses. So payroll expenses must be a minimum of 60% of your loan in order for the full amount to be forgiven. And we've talked about the maturity period if you have a loan being 5 years versus 2. And so that certainly is going to help out some folks. Okay, somebody else, Gloria, do you want to jump in here?
Yes. So just one thing on the payroll expenses. So the payroll costs are considered paid on the day that your employees, or if you pay by direct deposit, is the day when the ACH is initiated. So if you use, for example, Gasto or QuickBooks to run payroll, the day when the ACH, and that is for the payroll that are considered paid. So other than the salaries and wages, you can include also commission to your employee or bonus. You can include the premium for health insurance and the state unemployment tax, not the federal taxes. That is for the payroll. For non-payroll costs, you can include real or personal property rents and during the covered period. Just keep all the documents that you need to submit to are all the statements that with the payments and the tax return for the payroll, which is the 941, and the tax return for the unemployment. So the tax return that you file with the Texas workforce. And then all the payments that you have for rents, mortgage, or utilities.
Okay, thank you.
I think it's key here too, because this was clarified recently. You see where it says eligible non-payroll costs, and then parentheses it says incurred or paid during the covered period. Now again, covered period is the covered period, not the alternative period for non-payroll costs. But what this initially, there was a question whether it was incurred and paid, or did they mean incurred or paid? Well, it's become incurred or paid. They've clarified that. So a lot of the questions that I've gotten over time or as we were doing these loans have been, well, what if my rent's due 2 days after the 8 weeks runs out. Of course, now it's the 24 weeks. Well, essentially, if it's incurred, you can pay it and it will still be counted under the week period. In other words, if you get an electric bill and you want to, how you say that, a rent's due on the 1st, but your period runs out on the 30th, if it's considered incurred, then you can pay it. As long as it's, and same thing with those bills. If you get a bill and it's due on the 15th, your period runs out on the 8th, you can pay it on the 15th. You just have to pay it by the date that it's due next, is what we've been told. Does that make sense? I mean, if you incurred it, you got a bill for it, but you paid it after your period, as long as you paid it when it was due, and this includes payroll too, then it's considered incurred. So it would be covered under your period.
Yeah. So kind of like accrual accounting.
Correct.
Yep.
Yeah. It's not incurred and paid. You don't have to pay it during the covered period, but it has to be something that was incurred, and then you have to pay it at the next period that it would be due.
So one of the questions around here that I've gotten and that I'd like to ask was we talk about salary and wages, but we don't talk about classifications thereof. So, paid time off or sick leave versus, regular 40 hours worth of work versus a bonus. Is it blanket any salaries and wages, or are there subdivisions within that?
The only thing that I've heard that would not be included is basically for self-employed individuals, independent contractors, that this can become a problem because, again, their calculation was based on 10 weeks of payroll, but at the time they only had 8 weeks. So this is new to me, so this may be an inaccurate statement. They're limited to 850 seconds, 8 weeks essentially, that they can pay themselves during this period. They can't bonus themselves the extra 2 weeks that their loan was calculated on. From what I'm reading, and the seminars or webinars I've heard, that only applies to self-employed or independent contractors or sole proprietors. If you own a business and you pay your employees or you pay yourself via, it's a corporation, for example, and you pay yourself via a payroll service, you can bonus out money to make up that difference in that time period if you need to. If you have other eligible costs, it's not going to be as big of a deal. But a lot of people were worried they didn't have the other eligible costs. How am I going to spend that money? Well, if you're a corporation or whatever, you can bonus that money out. You cannot, again, the way I understand it today, you cannot do that under those other three, sole proprietor, et cetera. But yes, sick leave, paid vacation, all that for your employees is considered salary and wages and is eligible.
And that is what I am understanding as well. And they're really going to do a look back to determine, what's this normal for your business. And of course, as Danny mentioned with the sole proprietors or independent, the one person businesses, you're not allowed to just give yourself a raise because you had this money sitting there. So I think that a lot of this, the intent of the law is supposed to be what is reasonable, but it has become quite confusing because there are so many different potential scenarios.
And we just had a question pop up about past due rent or rent that was due but was not able to be paid prior. As long as you're paying rent back to February 15th, I believe, February 15th, 2020.
Yes.
Bills that had accrued that you were not able to pay, those were incurred already. You are able to pay those with the PPP money.
Yes, and we've had several questions just asking about the 8 weeks versus now the 24 weeks. Just contact your lender. If you have already set up if you have signed any papers, if you've already predetermined what you're doing with your lender, it is just best to contact them, see what that institution is doing and how they're going to handle the new situations and the allowances that have come about.
Yeah. Okay. One more real quick, trying to answer some of these. Because to me, it's relevant as we're moving along. Yes, sole proprietorships that used basically your net income on your Schedule C, that number, 10 weeks of that number was what your loan was calculated on. 8 weeks is what you're allowed to spend on payroll for yourself, and that has not changed. So how do you document it? What we're telling our customers is you can just, although this is unusual for a sole proprietor to write yourself, and I'm using air quotes here, a paycheck, that's what you need to do. You just need to write a check basically that says that was for payroll. And likewise, if you spend it on one of the other eligible expenses, I mean, just keep copies of your checks. You're not going to necessarily have a payroll service or take out taxes, all that stuff. So you're just going to need to indicate on the check that you've written to yourself that was your payroll. I hope that answered that.
Good. And if the employer has group health policy for employee and employer, is employer insurance considered a qualified expense? Panelists, do any of you have a definite answer? My understanding is yes, if that is a part of your normal payroll expenses and has been. Does anyone else have any thoughts or input on that?
Are they talking about if my employer pays part of my health insurance?
If I, as a business owner, provide health insurance for my employees and I include the cost of my health insurance as the owner, is that considered part of the forgivable expense?
My understanding is yes.
Okay, mine too.
Okay, let's go ahead and push forward. We have some other questions coming in, but we can answer those as we go.
Okay. Let's back up just 1 second, please.
Sure
and let me just, okay, so here on this particular slide, I went ahead and defined utilities: gas, electric, water, telephone, internet, and transportation fuel for business vehicles. It has the Federal Register there that it was added on, but this is only related to self-employed. And so just there is how you can look that up. But utilities, pretty much what we all consider basic utilities. Internet is included, but cable is not, kind of thing. Okay, Steve, thank you.
Vanda, this is David Smith. Can I comment on the previous topic? And the question was whether or not a self-employed individual could include their retirement or health insurance benefits. And yes. I'm looking at an IFR, which is a document that came out for the government. It says no additional forgiveness is provided for retirement or health insurance contribution for self-employed individuals. That includes Schedule C and Schedule F and general partners, as those expenses are paid out of their net self-employment income. So if it is a sole proprietor or somebody that's self-employed, you do not get to take your health insurance or retirement, according to the government document that I'm looking at. So.
Okay, thank you. And let me just say, David Smith is the regional director at the Abilene Small Business Development Center. And he has studied the CARES Act inside and out as pertaining to small business owners. So thank you, David.
Thank you. Okay, so let's go ahead and push on to this documents you must submit with your forgiveness application. Can you talk a little bit about that for us, Danny?
Sure. Again, it's going to depend on the individual and the business, et cetera. But essentially, we're going to look at, as it mentions here, bank account statements that are going to cover either the covered period or the alternative period. If you use a payroll service, then what you get from them is going to be more than adequate. If you pay separate, but just basically all the documentation. If you pay some of their benefits separately, we'll need proof of that. Again, it just pretty much states it here. It's not, this part's not, that complicated. Again, we're gonna review those to make sure they're legitimate, that they meet the qualifications, and we're gonna just semi-verify your calculation. But this is pretty straightforward. I mean, it's not anything, to me, it's not anything that you otherwise wouldn't normally have in the ongoing course of your business, except maybe for, again, self-employed people who don't usually write themselves a check. They would just need to have that information, as I mentioned earlier.
A question that came up about the previous slide, and I should have brought it up, but it skipped me, but it came in via email before the presentation. Was a question about a organization that is a corporation. They're a corporation. They have multiple employees, and they pay or they reimburse mileage and gas expenses. For an organization who reimburses their employees mileage or gas expenses, are those considered eligible or non-eligible for purposes of forgiveness?
My understanding is that transportation fuel forgiveness is only for self-employed. But again, somebody else may have a different opinion, but that was lifted that on the slide there were number 3 utilities.
Mm-hmm.
That was lifted straight out of that IFR.
Okay,
Yes,
thank you.
I agree. That is for self-employed, so not for corporation.
Okay, thank you.
Yeah, and it's not mileage. It's direct fuel.
Yeah.
Just the fuel cost.
So we have a continuation of the documents that you need to submit for payroll FTE. Do you guys want to talk about how that's calculated here?
Danny, you want to jump in?
Yeah, I mean, there's documents in here that again show you how to calculate. It's basically you go back and you divide by 40, et cetera. But I think for the vast majority of people, it's going to come back down to the simplified method is going to be the easiest way to use. And you're going to want to use, obviously the same method to calculate at the beginning and as you do at the end. But I personally think, and as an aside here, for example, we went back, and it's not going to apply to everybody. We went back and looked at First Capital's loans that we did. We did almost 1,800. And those that were one or two employees or less actually made up probably almost 50% of what we did in not dollar wise, but loan wise. So I think for the vast majority of people, it's going to come down to using the simplified method, even for multiple employees more than that. You start getting into that calculation, and to me, it's unnecessary when you have, unless you have a large number of employees. So to be honest with you, I haven't paid a ton of attention in that calculation yet because I think they're going to change it, number one, possibly for vast majority of filers. And I think most people are going to have those reports either from their payroll staff or service already, or using the simplified method is going to be far and away the easiest. I mean, I'm welcome to hear dissenting opinions on that, but it just seems to me like that's going to be the easiest way for everyone to calculate.
I'm in complete agreement. Kaushik is on the line. He's worked extensively with these various formulas. But, if you have some employees that are only working 10 to 15 hours a week, then that really pulls down that average. And by using the simplified method, that's just, one part-time employee rather than having to take 3 employees working to perhaps equal a full-time equivalent.
And I also think it's hard to go through all the possible scenarios that could be out there on a webinar for something, you know, like that. I think just providing, you know, the information and the calculation, and again, hopefully those that have multiple or a significant number of employees, you know, have a payroll service or could potentially contact their CPA or their bookkeeping. Not trying to pass the buck here, but I mean, this is new for us as bankers as well. So I'm way more comfortable if you get into the more difficult calculations on FTEs, you know, for people to go through the calculation and talk to their payroll service or deal with their CPA or bookkeeping professional.
Now, one thing to mention there also is, and this was said earlier, and I wanted to repeat it, make sure that everyone heard it, that the number of jobs that you put on your initial application is not the same as the number of FTEs, and you should be aware of that. That Danny said that earlier. Did I get that right, Danny?
Yeah, they don't have to match. They're a different measurement. The government just wanted to know initially how many jobs they were saving, how many people that worked were they keeping, you know, helping to keep employed, not an FTE calculation. So that is not of concern if those numbers don't match.
Good deal. So Vanda, you want to kind of take over the non-payroll document verification and talk a little bit about this?
Sure. That really, the only thing here that I want to emphasize is whether it's payroll, whether it's non-payroll, you've got to have the documentation. Business owners should have that anyway, but just know because of the loan, the covered period for the loan, you know, may want to take some special effort towards keeping these records. Know that, you know, you're gonna have to turn them in or at least have them on file for audit, even if you don't have to submit them to your lender. But again, we've talked about the eligible payments, our business mortgage interest, business rent, or other lease payments, and again, those utilities that for the business. And we have mentioned what all that entails.
A question that came in was, what about when you rent from yourself? I think that's what Michael's asking, but what about self-rent?
I am going to say that and David Smith, you may
want to. This is David Smith. As long as it's under a lease agreement, for example, if you have a business has a lease agreement with another entity, as long as you have an enforced lease contract, I mean, it has to be written. You know, all these have to be under written lease obligations, and so you may want to take that to the bank when you submit your documentation. But as long as it's under a reasonable lease under a written agreement between the parties, I think that would qualify. Because a lot of business owners might own real estate in an LLC and lease the property back to their business. And as long as it's under a written lease, I think it does qualify.
Right. And I think they're looking to see, is this normal operation? Again, so we'll go back to number 1 on slide 17 here, that it was just an existing obligation prior to February 15th.
Good deal. We'll go on to slide 18.
Yes, please. Thank you.
Vanda?
Let's see here. This is just going over the documents that you must maintain. So, you know, I'm not going to go over these, but any documents that you are using that pertain to the forgiveness of the PPP loan, make sure you keep those, because up to 6 years after the date that the loan is either forgiven or paid in full, you could be requested to produce those.
Good deal.
Okay.
And I think that's something people need to understand is we are not going to be forwarding any of the documentation provided to us to the SBA. That's just going to be something that has to be maintained in case there is an audit at some point in the future.
Okay. Steve, here on this next slide, we have really already gone over this and kind of beat this horse, but it is just on some examples on the FTEs, and then that next page is an example, and it's just showing here that if you use the regular method, you come out to 4.1. The simplified method is 4. So if you look over there and you see employee B is 60 hours, that counts as 1. Employee E is 60 hours, that counts as 2. And then the others are under 40. So there's, if you look at those, there's a 30 and the 20, so that's 1. And the 15 and the 10 is 1. So you come out with that 4 FTEs. And again, that simplified method is just quite a bit simpler.
Yeah, I think the only reason you would want to go to the more difficult one would be if that's because of changes in your business during the time period. That's the calculation that shows you didn't reduce staff, and that could be possible. Outside of that reason, really the simplified method makes the most sense. But if the simplified method comes back and shows that you reduce staff, which would cause a reduction in the forgiveness amount potentially, then you might want to do the other FTE calculation to see if that comes up with a different result, and if so, you would use that.
Right.
I would do the simplified method first, and if it showed I didn't reduce, I'm good to go.
Very good. This is just going back to the fact that the intent of the law was so that businesses could maintain their employees during this disaster, and to obviously keeping people employed. So know that once you go through this and determine the number, hopefully, that you have restored to, and it's completely forgivable, that if there is a reduction, then that portion of the forgivable loan will be reduced. The forgivable portion will be reduced by the amount that you didn't meet. So if you, now that the number is 40%, if you had 38% payroll expenses rather than 40, there's a 2% factor now that would not be forgivable.
And to clarify, that I've noticed a question about my saying you could be audited. There's a statement or a question that the SBA will not be auditing loans less than $2 million. That's not accurate. The $2 million loans are absolutely going to be audited, period. And they're auditing them to make sure that those businesses actually needed the money. We all know the Ruth Chris deal and all that kind of caused that. But the SBA is coming back and saying any loan over $2 million, they are going to review the documentation to make sure that that company needed to get the money. That doesn't mean that anything under $2 million, they may not, in the course of a normal audit, or asked to see other information to make sure your calculations were done right. Those are two different reasons for audit. So just because they said the 2 million doesn't mean you can throw your docs away and you're done. You still need to maintain that in case you are asked that. The $2 million again is just an audit to see if they even should have gotten the loan. And if they determine they shouldn't have, they have to repay the entire loan.
And I know that this question was answered in chat, but the APCP is basically the alternate covered period, right? I don't know what the first P stands for, but I know that it's basically the alternate covered period, where it starts at the first.
Alternate payroll covered period.
Thank you. So this is basically the slightly altered covered period that starts the Sunday after the loan was funded, and then goes for the 56 days, I believe. Is that correct?
And that's only for payroll. and for those who have biweekly or less payroll periods. So whatever date that loan was funded, your next payroll period you could choose to begin just for administrative ease. But keep in mind that does not apply to the non-payroll allowable expenses. It is payroll only.
Understood.
Amanda, I wanted to make sure that somebody said something about a Sunday, but it's actually the first payroll period following the beginning of the funding date when you receive your funding. So, for example, if you received your funding on April 10th and your next regular payroll period was on April 16th, whatever day that is, that's the beginning of your alternate payroll covered period.
Yes, thank you.
Correct. This helps because we were telling people up front before they made this, added this alternate period. They're like, well, what if my 8 weeks ends on the 10th, to use your example, but I don't pay my people till the 16th. What do I do? And at the time we were telling them just pay them on the 10th. There's nothing that says you can't pay them on the 10th, but this allows you now to use that alternate period if it applies. And again,
well, the other thing is when you're calculating these individual payrolls for all your employees, it just makes it simpler to do it where it lines up with your normal payroll period.
Oh,
absolutely. So you go to your payroll records and pull the employee census as far as full-time equivalents and dollar amounts paid, and you don't have to do all this adding to and subtracting from the end of a payroll period. It just makes it
absolutely. That's
line up.
So glad that they made that change, because that is one of the big concerns we had as that our customers had as they were going through this, is how is this going to line up, because they didn't control the date the loan was funded. That's the other thing. The SBA came in and said, we as banks, we had to fund the loan no later than 10 days from the SBA's approval of the loan. The customer couldn't choose the disbursement period outside of that 10-day period. So it really, until they did this, it really created an issue.
So we have a couple of additional questions about the covered period, and one of them is, we have several employees on salary. Do we put 40 hours for them on their FTE? And David, I believe you wanted to answer this.
Yeah, anytime you have a salaried employee that's considered a full-time employee, and it's a full-time equivalent. So you get 40 hours is one full-time equivalent. What you're trying to get to on these calculations is equivalency. Full FTEs or full-time equivalent, and a 40-hour employees is one full-time equivalent. And if you have a part-time employee that works 10 hours a week, that's going to be basically 25% or 10/40ths of a full-time equivalent, unless you use the alternate method, in which case you get to treat that employee as it was a half-time equivalent. But yes, all salaried employees are at 40 hours. Now remember, this is only the maximum amount that you can use in terms of dollar amount for a full-time employee is the equivalent of $100,000 per year. And that doesn't include any benefits that might be added. So you take that salary and divide by 52 and multiply by 8. And I think it comes out to be something like $15,180 whatever dollars for that 8-week period. And that's the most you can use for any employee that makes over $100,000 a year. So you need to be careful on calculating salary compensation for employees that make over $100,000.
Good deal. Now, there are a couple of slides that I skipped because we're at the end of our hour, and I really wanted to get started on the questions related to the roundtable that we're going to do. So these slides will be put up and shared publicly so that you guys will have access to them, and we'll have access to all of those. We're going to go ahead and transition over to our panel discussion. But one of the things that I wanted to share with you guys is this list of links. It's going to be at the very end of the slide deck that you will be able to download. And the other thing that I wanted to stress to you is, again, that these things are all in motion. So if you do have a question, talk to your CPA, talk to your bookkeeper, your tax professional, your banker, depending on what the question is. These people are a team around you that can help answer these questions, now and as the situation develops. So make sure that you do reach out to them.
I'm not going to get too political here, but I think it's to everyone's benefit to contact their representatives at the federal level, just via email or letter, and just ask for this 150,000 or less simplified method. Again, that's just to give you perspective for us. If the 150,000 and less becomes only a certification process and not all the documentation and calculations, that's 80% of the number of loans that we did. And we're just like any other bank. So that means 80% of the businesses that we helped could go to a much simplified forgiveness application. That's still being contemplated. So if that's something that affects you and you think it's, would help, then certainly reach out and try to help us get that done.
I know I'll be calling. So we have another question related to software cost or covered cost under the PPP, and I know that we've gone over that a couple of times, but can you guys talk one more time about the covered cost related to the PPP that can be forgiven?
The covered cost for payroll includes payroll, whether they're hourly or whether they're salaried. It includes the state unemployment tax. It includes any employer paid health insurance or retirement. That is what I am understanding. And this is for those who have employees. We're not talking about the self-employed or your just one person business operation.
Independent contractors.
Independent contractors, right. Thank you.
Yeah, so I've tried to put this up here for everyone because there's been a couple of questions around whether software is covered kind of under that utilities, because people had to work remotely. They had to pay for Zoom. They had to pay for their remote control of choice and the companies to set those up. And I don't believe currently, as the resident IT person in the room, that is covered under utilities. It is strictly electric, gas, water, telephone, internet access, and then transportation. And that's specifically fuel for business vehicles related to self-employed only.
And we had a question earlier that was, if your cable and internet are bundled, how do you separate that out? I do not know the exact answer to that. Gloria, do you have any, or David?
Yeah, I think I answered it online, but basically, yeah, internet costs are allowable, and so I would just break out that part of my cable subscription that reflects the internet and include the internet charges on there as an allowable cost under utilities.
I would tell them I was getting the cable for free and I was only paying for internet.
So do we have any other questions? I don't see any other questions in the Q&A or in the chat. So we'll stick around for a second or two if you guys have questions that you want to put in Q&A, because that's why we're here. We're here to help you and answer those questions related to the PPP.
While people are thinking about their questions, and there are businesses that have costs that are not related to payroll, utilities, rent, stuff like that. There's another loan program actually that's been out longer than this payroll protection program, or paycheck protection program under the CARES Act, and it's called the Economic Injury Disaster Relief Program under the SBA. And that loan is to cover other business-related costs for working capital, some equipment needs. You can use it for other costs. And that one you can apply for by going onto the SBA website and checking EIDL loan it's basically the economic injury disaster loan. And there's a link there and it's very simple. It takes about 20 minutes to fill it all out. And they ask you a number of questions and you apply for that loan. And depending upon, they'll ask you about the number of employees and about your gross sales and cost of sales. And based upon that, they'll make a determination whether or not you're qualified for that. And it's a very simple process, and you can get a loan of up to $150,000. It was a much higher amount, but because they had so many requests for that loan, they've limited the maximum amount to $150,000. And they'll determine that. You can't say, I want to borrow so many dollars. You put in your information and they'll send you something back, and it takes a while. It's not a fast process, but that one is done through the SBA website. So that's available.
Key to that is that program is also funded directly by the SBA and the Treasury. Banks are not involved in that process at all. That process is typically, or that program's been out there and it's been used mainly for, quite honestly, natural disasters, hurricanes, floods, tornadoes, things of that nature for businesses. This one just happened to be a natural disaster, I guess, that was nationwide. And the program got overwhelmed initially. I think they're kind of catching back up with some of their changes, but we get a lot of calls on that too as a bank, and we are not involved in that process at all. It's a completely, from the application to the funding, done by the SBA.
Yes,
Let's go to a question real quick. Jordan Smith has a question that I'm also curious about because I've been impacted by this. Right at the end of my covered period, I'm coming up on that very quickly. And with that being said, I have a employee, full-time employee, 40 hours a week like clockwork. And that employee has decided to leave. He's found a different opportunity that he wants to pursue. Will employers be punished or penalized on the forgiveness if an employee voluntarily leaves?
No, as long as the employee is released for cause or leaves with their own volition, no, that does not include that does not impact you on your loan forgiveness.
Also the same thing, if you did let someone go and you try to rehire them and they do not want to come back, again, some people didn't because they were making more money on unemployment. Then
I had one employer that sent certified letters to all of his former employees, asking them to come back to work. Now I don't know how many responses he had, but he did document the fact that he did try to hire them back.
If you document that you tried and they don't, then you've done all you could and you will not be penalized.
Right.
Correct.
Of course, what they want you to do is get the employee to sign a statement that they're not coming back. And I said, good luck with that. But all we can do is send it out and ask and tell them the job is available, at your previous rate or maybe even higher. I don't know. But the job is available, and at least you've documented that you made the attempt. And I think that's a good faith effort to do that. Yeah. A question came up about, somebody asked about the forgiveness process. If you are good with going ahead, if you're at the end of your 8-week period and you meet all the conditions, you can certainly go ahead and apply for forgiveness under the 8-week provisions. You can still do that. I have some businesses that are already working with us at the SBDC here, and they meet the compliance forgiveness requirements. And so we're ready to submit those, and this. All the 24-week extension and the new terms does is give people more time, to make sure that everything is lined up. But if you're good with the 8-week thing, you can go and apply for forgiveness right now if you want to.
So one of the questions that was asked is, do we have any idea from submittal all the way through to approval of forgiveness approval, how long that process will take?
60 days.
We're allowed up to 60 days as a bank from the application to review it and get it submitted. Trust me, we don't want to take that long. We want to do them as quickly and get them out as we can. And then we're supposed to get basically we make the decision, we notify them that we got everything we needed, and we should get an answer back from the SBA really quickly. I can't give a time frame on that, but really, really quickly.
So one question that came in for those businesses that got both the EIDL advance that was sent based off the number of jobs that you had, and the PPP. Do you have to repay the EIDL loan advance? Will that have to be repaid?
Boy, there's been a lot of discussion over that, even among SBA and different offices of SBA. Any of you may chime in, but my understanding yesterday, it finally makes sense to me that as long as you do not use that advance for payroll expenses or for other expenses that you, other allowable PPP expenses, then it will be forgiven.
Now,
But,
let's make sure we're talking loan advances only, the grant.
yes.
Yeah.
So that there are two elements to the EIDL. One is the advance, or you may hear it referred to as a grant, and the other is the loan. And again, your lenders, your local lenders do not have anything to do with this program. This is a direct disaster program from the disaster side of the Small Business Administration. But if you received that advance or grant based on the number of employees that you turned them in, which was $1,000 per employee, that is a grant as long as you do not use that on the expenses that you use the PPP loan for. If you use it on the same expenses, then that is going to be deducted from the forgiveness amount. Now, that was my understanding yesterday late in the day. Prior to yesterday late in the day, that was not our understanding at all.
So Jeffrey Haynes has a question. I think probably Danny is best suited to answer. Is the forgiveness decision solely decided by the bank, or is the bank applying for forgiveness on your behalf to the SBA?
The bank is responsible for determining the amount to be forgiven. So we do that, again, by looking at the documents we're given, during a cursory review of the documents and looking at the calculation again. At that point, it's our responsibility that we apply for the forgiveness. So yeah, the decision is technically, I guess you could say, made by the bank, but it's made based on obviously these rules and parameters. Now, if we come up with a calculation that doesn't forgive everything and someone disagrees, we're obviously going to sit down and say, well, give us some more information or try to figure that part out. But the way we're understanding is we are charged with determining the amount that should be forgiven and sending that request into the SBA.
So the next question that we have is from Linda, and Linda asked, I could not understand the part about when we start the loan. We are a week behind on payroll, so I don't know. So do I start the week we pay them or for the week they actually worked? And my understanding of that is that the moment you start from the moment that you send the ACH, if you are doing a direct deposit, or you write the checks and hand them to the employees. That's my understanding, but is that correct?
Yeah, I think maybe the confusion in that was, we're also saying that if you get your loan today and you have employees that you haven't paid yet, you can pay them today with your loan proceeds and it still be covered because that was incurred. So yeah, you're 8 weeks or 24 weeks now. That'll take me a while to get used to. Starts when you either get the loan, it's dispersed, or your first payroll period, whichever you choose.
So
But if it's incurred and you're behind, just like rent, if you were behind in rent and you got your loan today, you can pay that back rent and it be covered, just like wages, as long as it was incurred. Does that clarify?
I think that's what they were asking. Yes.
And that is only if you pay payroll bi-weekly or less.
Or less, correct. That's the only time you can choose the alternate period is
Yes.
if you pay bi-weekly or less.
And we have a question from Melinda, and Melinda says, what about distributions for a partnership where the owners can't take a paycheck?
Ooh.
Okay. Well, okay, David, you may want to jump in here, but
Okay, repeat the question again. I didn't catch all of it.
The question is, what about distributions for a partnership where the owners cannot take a paycheck?
Okay, the partnership, the basis for the partnership, PPP program is based upon self-employment earnings. If you look at your K1 that's attached to your partnership return for 2019, there's an amount on there that shows self-employment earnings, and that's what it's based on right there. It's how much of the earnings during that 8-week period. Partnerships are very much like a sole proprietorship. It's based upon the amount of self-employment income that's allocated to you. And so it's not based on distributions, it's based on how much the earnings were. And so it gets a little complicated there because it's very similar to the sole proprietorships, and that's where you take your self-employment income up to $100,000, divide it by 52 and multiply it by the 8-week period, the 8-week covered period, and that's the amount that's applicable for forgiveness.
Yeah, the key thing there, you're right, is that it has nothing to do with distributions. Distributions can come from prior periods' earnings.
Mm-hmm.
So it's only that period's self-employed, like you mentioned.
And we get this question a lot from S corporations that don't pay their owners that don't compensate their the owners through through a paycheck. They just report the distributions as taxable income. Well, those distributions don't qualify under the PPP program because they're not compensation. Those are distributions from a corporation. Those are two different things.
Okay, so Phil has a question. He says, what if you've hired and employed temporary workers that worked a few days on a special project during the January 1st through February 20th time period? They understood they were temporary when hired. How does that figure into your FTE account for loan forgiveness? Now, my understanding of that, and correct me if I'm wrong here, because I'm learning too, but my understanding of that is we are only concerned about the FTEs during the covered period. And so if we aren't calculating back to that February date when we could start, then that doesn't matter at all. Is that correct? Do you guys think that's what he's asking? Or?
This is David again. You got two periods that you're looking at, and you're trying to match them up to compare the number of employees or full-time equivalents and the amount of payroll you paid. And one is the base period, and the base period for the most part is going to be January 1 through February 29th of 2020. That's your base period. And then you have the covered period, which begins when you got your PPP loan, and you compare those two periods. The base period, if you had a bunch of part-time employees that maybe worked 10 hours a week and they weren't there for very long, what I would do is consider using the alternate method where you get a half-time equivalency for a part-time employee that worked 10 hours. And so that may be a better full-time equivalent calculation on your base period. And then just to comment on this thing, guys, and this Vander referred to me as the Dr. Fauci of the SBDC. I'm just greatly concerned that we're going to have that we're going to face a massive run. I don't want to say run on the bank, but we're going to have all these people going back to their banks within the next few weeks, and going in and saying, well, I understood that when I got this loan, you know, I saw it in the paper and it said as long as I use 75% for payroll, everything would be forgiven. But then you have all these rules that came out, you know, that come out that you have to comply with, and they're complicated, guys. They're not easy at all. And I would highly suggest that you work either with your accountant, your tax service, or one of the SBDCs in the area to work through this. And now that we have the 24-week period, we have some time to do some planning. I just hate to see anybody, you know, want to go to the bank at the last minute and say, okay, here's all my numbers, and say, well, you know, you've only, you know, you got a $100,000 PPP loan, and we can only forgive $80,000 of it. You got a $20,000 you know, loan at the end, and there are going to be a lot of people that are not happy about that. And I think now that we have this extended time, we can do some planning on that. But I think there's some planning involved in it, not just waiting till the end and then taking your numbers to the bank. It's a lot like your income tax return. If you do a little planning, you're going to get a better result at the end, and you're more likely to get a refund rather than, and if you do some planning. And I'm encouraging you people to contact us at the SBDC to help you work through these issues. And I'm not trying to, you know, to be a forecaster of doom and gloom, but I just don't want people to be disappointed and surprised when they go to their lender, and the lender, you know, doesn't have a choice. They just go by the numbers and say that, you know, you don't qualify for total forgiveness. And a little bit of planning and a little bit of foresight might have been beneficial in the long run. And I think with this extended period, I think it's going to be a lot easier to work with. And that's why we're here at the SBDC, to serve you people and help you with this process.
So one of the questions that we had is Dick asked to clarify on the soon to be signed bill. If you don't meet or exceed the minimum 60% minimum payroll portion of the loan, the entire loan will not be forgiven. Is that correct? And if that occurs, is the recipient now responsible for the 1% interest on that loan?
Okay, that is one of the misperceptions, but the entire loan is not affected. It's only the percent that didn't qualify for the minimum payroll expenses of 60%. So say that you had 50, under the new regs that say, you know, we're looking for a 60% minimum payroll expense. If you only had 55% rather than 60, 5% of that would not be forgiven. It's been how I have read that. Danny, do you agree?
I agree.
Good deal. Okay, Becky has a question. She says, are federal payroll taxes allowed expenses? And I think we've already asked this. Federal payroll taxes and expenses are not allowed for the PPP. They're not. And then for the EIDL, I don't know. I don't know if you can answer that, Vanda, or not.
Gosh, it's been a while since I've read all the EIDL. Okay, so you can, first of all, Becky, you can use the idle loan or advance to pay payroll expenses. You just cannot use both the idle and then the PPP and then have the PPP forgiven. So I don't know if that helps you out any. And to be quite honest, I need to look up about the federal taxes on the idle. I do not know about that. There was a program that covered that. Gloria or anyone, do you remember? It had to do with the family and the federal taxes, but I'm sorry, I cannot recall that right now. I'll need to look that up.
Gloria or Dave, did you guys have any additional comments on that one?
I was typing an answer in on one of the chat questions. Can you repeat the question, please?
The question, hold on a second. So the question is, can you use the emergency economic disaster loan or the economic emergency disaster loan, the EIDL, to pay payroll tax expenses for federal payroll taxes?
Yes, you can use the EIDL. You can use the EIDL loans for working capital, basically. So yeah, you can. But that's the loan that we talked about. That's the different loan from the payroll protection loan that we've been talking about all day here. So yes, you can use EIDL funding to pay operating expense, accounts payable, things like that. The EIDL is a completely separate loan, but those funds can be used for that. But now remember, there's no forgiveness on the EIDL loan. If you receive that loan, that's a loan that has to be repaid. The one that you applied directly to the SBA for.
So we've got time for 2 more questions that we have, and there's 3 questions in here. One of them, I believe, has already been answered, though. So I'm going to take Jeffrey's, and then I'll take the one that's anonymous right after Jeffrey's. So Jeffrey asked, if you pay biweekly, does that mean based on your starting period that you can only have a maximum of 4 payrolls in the 60% calculation?
Okay, I'm just going to take a shot at that because I have not done the math on the new 24.
Well, it's going to, yeah, I mean, it's going to change because now you've got 24 weeks instead of 8.
Mm-hmm.
Yeah, you got 3 times as much time to use your payroll,
right?
And you're only required to, use up to 60% of it for payroll now instead.
It's going to be, it's going to be way easier to hit these numbers than before. Before you had 8 weeks to spend 75% of it. Now you've got 24 weeks to spend 60% of it on that.
Until Tuesday. Okay.
So, yeah, and the again for Jeffrey, that period's gone out to 24 weeks instead of 8. It's 3 times as long now.
And that doesn't require the bank to change the terms of the loan or anything like that. Is that correct?
Yeah, that's been asked multiple times. No, the bank loans that are currently existing, they have a 6-month payment deferral period anyway. So there's really the 8 to 24 weeks does not affect the loan in any way.
Okay, and then for our last question, Dave Smith said that he would like to answer it. And the question is, will banks require the borrower to supply a copy of their 941 form to verify their payroll cost, or will payroll reports be sufficient?
In the documentation and the pronouncements from all the Treasury and the SBA, they suggest that you supply your 941s. Now those, to be honest with you, are not going to match. They're not going to match up. The dollar amounts on the 941 are not going to match up with 8 weeks payroll. Because you have odd periods and odd weeks in there, and the 941, as you know, is a quarterly payroll tax report, which is done for a 3-month period. But it does substantiate the fact that you have filed your payroll tax reports, that you're current, with the government on your payroll check. And so I would go ahead and take those in to support your loan forgiveness application. But as far as trying to match up the 941 with the information that you submitted for your payrolls in the payroll periods compared, they're not going to match up. But I would take the 941s and maybe even your TEC quarterly reporting as well. So,
So Danny, did you have any additional comments on that?
Nope, that covered it. I agree.
Good deal. Thank you. Okay, guys. Well, that concludes our PPP forgiveness webinar sponsored by the Small Business Development Center at MSU and Think of IT Computer Services in Wichita Falls. If you have any questions, the Small Business Development Center stands by to help you, as does my team. And we would encourage you to reach out to your tax professionals, your bookkeeping professionals, your CPAs, and your bankers to make sure that you get all of your questions answered. We thank you all so much for your time and attention during the webinar and wish you much success. Thank you again. Oh, and one thing, thank you to our presenters. I almost neglected that. So thank you, Walter and Vanda, Gloria, David, thank you so much. I think that we lost, we lost Danny, but Danny, thank you. And David, thank you. So thank you to all of our presenters.
Thank you for hosting this very much, Steve.
thank you, Steve.
Until next time, take care and have a great week. Bye-bye.